Micron's latest quarterly financial results really disappointed stock market investors, including myself, because I've had Micron stock rated as a buy, and the big stock price drop was disappointing to be sure. So a lot of investors are curious about what's going on with Micron. That's why I'm going to make this video to really highlight the inner workings of the latest quarter, the things management said that disappointed investors, and what you can expect from this company. Is this drop a temporary drop? Is it a buying opportunity? All of those details I'm going to share with you in this video. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in discussing its latest quarterly financial results, Micron management said that data center revenue grew over 400% year over year and 40% from the previous quarter. That's a record level for the company, and now the data center business is over 50% of the company's overall business. That's good news because the data center segment is expected to grow much faster than the company's other segments. So, following the earnings release and following the change in the business mix, you're now getting a business that's skewed more towards the data center, which is an area I like much better than Micron's other segments, which are things like personal computers and smartphones and tablets, etc., other electronics. These are more mature industries that are not growing anywhere near the rate of the data center segment. That's why I prefer Micron be a business that's skewed more towards the data center than the other segments, because the data center business is growing more quickly and it's expected to continue. And it's in a long runway of growth. So the company's saying that their HBM, which stands for high bandwidth memory, shipments were ahead of plan, and they achieved a more than a sequential doubling of HBM revenue. So quarter over quarter, their HBM revenue more than doubled. This is a newer segment, a newer product for Micron, and it's just ramping up. So this rate of increase was ahead of schedule, which is what you like to hear. This is part of the business executing. And when you're investing in a business, one of the things you want to see is strong execution. This is outside of forces like macroeconomic factors that drive demand higher or lower, right? These are things the company cannot control. But what you always want to see is the company doing an excellent job controlling the things that it can control, executing on its plan, regardless of those outside factors. And that's what you saw here from Micron in the latest quarter. So in 2028, they expect the high bandwidth memory total addressable market to grow by 4x from the $16 billion level in 2024 to exceed $100 billion by 2030. That's a massive increase in this market. And another reason why, what I was highlighting earlier, this goes into the data center market. And this is one reason why I said I prefer the business be skewed more towards the data center segment outside of the other segments in the business. So this HBM growth will be transformational for Micron, and we are excited about our leadership in this important product category. So this is a product category that's expected to grow by $84 billion in 5 years, and it's a category that Micron holds a leadership position in. So that's great news for Micron stock investors. You might say, well, everything you've talked about so far is good news. Why is the stock falling? Well, we'll get into that. But for now, the company wanted to lead with the good things about the company, about its longer term prospects before it gave investors the bad news. So the leading edge DRAM supply remains tight, driven by robust demand in the data center DRAM market, which includes HBM, and that will underpin their business results throughout fiscal and calendar year 2025. So in the upcoming year, they're going to benefit from the growth in that data center market that's looking for the most cutting edge DRAM technology, which Micron is selling. But here's where things got sour is the consumer-oriented segments and seasonality are going to impact the company's upcoming quarter, Q2. They're seeing a more pronounced impact of customer inventory reductions. So they already thought that this upcoming quarter there was going to be a seasonal slowdown, right? Of course, following the holiday quarter, sales of electronics like personal computers, smartphones, tablets, etc., they decrease from the holiday season, right? The holiday season is when sales are the highest. And so they were already expecting a slowdown, but that slowdown is going to be much worse than they expected. And that's what they're saying. Their Q2 shipment outlook is weaker than we previously expected. But the good news is that they expect this adjustment period to be relatively brief, and they expect stronger shipments in the second half of the year for calendar 2025. So the second quarter will be bad, but they expect the third and fourth quarters to be much better. And for the full year, they expect substantial revenue, record revenue, significantly improved profitability, and positive free cash flow. And this note here, while you might think it's a good thing when they're highlighting positive free cash flow, that was actually also a concern. A company with the level of revenue that Micron generates, just saying that they're going to be positive free cash flow was a bit of a disappointment. And one of the reasons why it's only going to be positive and not like meaningfully positive, not in the billions of dollars, is because they're spending so much capital expenditure on building newer facilities, expanding existing facilities, benefiting from or trying to capitalize from government incentives to build out manufacturing, but also investing ahead of this strong demand that they're forecasting, right? We talked about earlier how the total addressable market for HBM is going to grow from 16 billion to 100 billion by 2030. So with its existing manufacturing capacity, Micron doesn't have enough to capitalize on this growing demand. So it needs to invest to prepare for that incoming demand. And so markets, of course, whenever you announce increasing capital expenditures, markets are always skeptical, right? And it's been a surprise that, remember last year, there was a lot of pressure on the large tech companies that are investing in these data centers, spending tens of billions of dollars on capital expenditures. They were receiving some pushback from stock market investors asking and pushing, why are you spending so much money in this category? How can you be sure that it's going to pay off? And so with Micron, it's the same thing. Their capital expenditure in the latest quarter was $3 billion. They only generated revenue of $8.7 billion. So they're spending significant percentages of revenue on capital expenditure. That makes investors nervous. That makes investors more nervous, especially because of the disaster that Intel experienced in recent years by increasing its capital expenditures significantly. I'm not saying Micron is going to face the same story as Intel, but Intel has spooked a lot of investors, and they don't want to see companies like Micron go down that same path. So that explains why Micron stock price is down as much as it was following the earnings release. But as I highlighted in another video I did yesterday, that I think this is a buying opportunity because there's such robust demand for Micron's products. It's reasonable to invest in anticipation of that growth. And on top of that, you're getting the government incentives to build out those manufacturing facilities. So I think the management team is making reasonably prudent decisions there. And I think longer term, the stock is a good value for investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.